going into this FOMC, the markets are expecting for the Fed to leave rates unchanged. We understand that by looking at tools like this that show us the probability of the Fed leaving rates unchanged or raising rates or lowering rates. If the Fed leaves rates unchanged, the focus will shift to the press conference and what Jerome Powell has to say about the recent inflation pressures with the Middle East tensions. Now, what we're going to do in this video is prepare for the scenarios that are likely to happen. That way, we're not caught trading blind on that day, completely confused and not knowing what to do. Now, in scenario number one will be if the Fed comes out a bit more on the hawkish side. So say, for example, we see that the Fed leave rates unchanged, but their tone shifts and they come out and start talking about the recent inflation pressures being a problem for future rate cuts that the Fed wanted to do. This type of cautious tone from the Fed and being worried about the inflation is most likely going to bring dollar upside, while risk assets will get pressured as this happens. Scenario number two would be if the Fed simply comes out, they leave rates unchanged, but they say that the recent inflation pressure isn't something to worry about. If the Fed comes out and say that inflation isn't a problem, they're looking to do further rate cuts this year, that is more of a dovish tone, and the likely reaction off that will be dollar downside, while pairs like gold or even stock markets can start to rise based off the potential that we may see further rate cuts this year. So now that you understand the most likely scenarios from the Fed, make sure you stay on the lookout for the headlines. But again, you want to make sure that you let price settle during these days because the volatility will be a lot higher, especially if we see any surprises from the Fed themselves. I want to know more about how you guys are preparing for this FOMC and what you guys are expecting to happen in the markets that day.